All right, good morning, everybody. Oh, let me adjust this just a little bit there so you can see my shiny head. Let's get that going. So there you go. Good morning. It's Monday morning. It's 8:15, and that means it's our Monday morning mortgage tip. So I had a week hiatus here. We're back in the office, and we're ready to roll again here. But hopefully, first of all those fathers out there, hopefully you had a great Father's Day and a great weekend, and you're all rested and ready for this next busy week. But this morning, got Mr. Mark Waterman here from Great Western, and he is going to talk about today's Monday morning mortgage tip. So take it away.
All right, Shane, thank you. So I have had some recent inquiries as to the private mortgage insurance. Don't recall if anybody's mentioned anything about it or not, but I figured I would touch on it. So when you're looking to get a conventional loan and you are putting less than 20% down and you're getting financing on the secondary market, there will be private mortgage insurance, or PMI. And the amount that you pay is kind of dictated by the loan amount, the actual percentage that you're putting down. Credit scores come into play, and basically that amount that you're paying is insurance to protect the lender from you defaulting. Okay, so you could be paying $20 a month, you could be paying $300 a month, kind of depending on your loan size and the other variables that come into play. We do have a couple different companies that we run through to try to get you the best deal possible. Specific to the loan that you're getting, but it is potentially that fifth part of your loan payment, where you have principal, interest, taxes, and insurance. That PMI could be that fifth part. So obviously it's we will run through that case by case scenario with the borrower, but once you do have that loan established and you're paying that monthly, you're making your monthly payment. Once your loan gets to 78% of that original value of the property, that PMI will automatically fall off. If during the life of the loan you're looking at removing it and you think you're at 80% of that, either that original property value, or potentially you might be looking at getting an appraisal, you can contact the lender, and as long as you meet a few requirements, usually a 2-year period, you have to make a written request, you have to make sure you make your monthly payments on time. They reward you for that. But there is potentially, through contacting that lender, if you've made improvements or if your property has increased in value since you originally had purchased it, that potentially you can get that PMI off sooner. And certainly I would, anybody can help, potentially guide you through that process and what that would take as well. But kind of a case by case scenario. There are different factors that come into play, but it is one more step to think about. And when you're trying to decide on how much money to put down, it is something to consider as well.
Good, yeah. So like you said, just the fifth portion of that payment there. Some people don't think about the PMI. So if you got any questions for Mark, feel free to reach out to him. As usual, his information's on the top, on the bottom, on the sides, wherever your device allows you to see it. I'll have all of his information there. Feel free to reach out. Give him a call, email him, whatever it takes. If you have questions on that PMI, stop into the office there too. He'd be happy to talk to you. So if you have other questions for us that you'd like answered on our next episode, feel free to let us know. Again, comment in the section there, and we'll be happy to answer that on our next episode and kind of roll with it there. So that concludes this Monday morning mortgage tip. Thanks everybody for watching. Until next week, we'll talk to you guys later. Have a great week. See ya.